To cover in the forex factory calendar, talk about something that would be kind of interesting, because I'm going to be transparent and let you guys in on something, because I often feel like for a lot of people when they get on this call, they don't care about fundamentals. So I said that I was going to cover stuff, and I didn't, because I'm like, they probably won't care. Who's going to listen? So I decided to like backtrack and go back to what I know is going to help you guys in the long run, with trying to really and truly understand like what it is that I know about fundamentals, because the Forex Factory is cool. But as you guys can tell, probably I get a little bored. I'm just like, oh, this news item's coming out, and we already talked about it, so I just kind of skip over stuff. But I'm going to backtrack all the way. And since Jerome Powell spoke today, I thought that it would be good to go through, look at his speech, and then also talk about something from a fundamental standpoint that I feel is really important, and that is banks and how they operate. Because there are a lot of people who will tell you about the market, and they'll tell you, oh, there are certain things you will never know about the market because, who knows those things. To an extent, that's true, but I want you guys to use logic when it comes to certain things. And that's what I'm going to help you with tonight. So I'm going to go ahead and get started with Jerome Powell and just kind of talking about this speech. So for the most part, what Jerome Powell is doing now is just repeating himself over and over again, because whenever the Fed lowered interest rates down to about 0%, they stated that they were going to keep these rates low until 2022 or 2023. So we already know what's going to happen with interest rates. We already know what's going to happen with the Fed's view of our dollar. So it's nothing that's just really new. I always just like to highlight certain things. So when it comes to the Fed, certain things they're wanting to aim for right now: higher employment, higher income levels. These are things that have been mentioned before in the past. Those things were kind of obliterated whenever COVID came. We actually had reached peak. Like we were going towards peak employment. We had one of the lowest unemployment rates we'd ever had in a while. Incomes were actually getting to the point where companies were profitable enough and had gotten to a place where they could really pay people or increase the number of positions that they had open. But COVID came, that just kind of turned things on its head. They put out charts and stuff with this speech. So he pointed out women's rates of pay, African-American rates of pay for those in single parent or single adult households, I should say, versus those with two adults in the household. So some of the graphs are pretty cool that they went through and kind of highlighted. This unemployment rate, he did mention it here. It was the lowest in half a century. So still pretty good. Another thing, just kind of sticking on the topic of Black unemployment, it's at 9%. So if you look at where we are with unemployment rate, I'm just going to switch to the Forex Factory really quick and show you how you can actually reference some of these numbers. So if you don't have the actual report in front of you, you can come back here and look to see what the unemployment rate is on the Forex Factory calendar. Just go to the first Friday of the month and you'll find it there. So now that we know that the unemployment rate for the country is 6.3%, we go back to his speech, and yes, Black unemployment is still quite elevated because it's at 9%. So that's something that is going to need to be worked on. And let's see, labor today. Sorry. Coming down here, I'm trying to find it right here. So essentially what the Fed is wanting to do is keep interest rates at about 2%. They want to keep inflation relatively low, and they want to keep the actual interest rates low. But there's going to be a give or take on that side, because you can't have interest rates low and inflation low. So something's going to give. And they've decided that letting the economy run a little hot with inflation is okay. Even though 2% is the goal, 2% is always what they're going to try to strive for and aim for. Whatever happens with the economy now, they're just going to try to manage it with a 0 to 0.25% interest rate and manage inflation as it goes. If it runs a little hot, it's okay. Essentially, they want to make sure that banks are stable. They want to make sure that they're still able to do bond and treasury exchanges, and essentially businesses have to keep going. Businesses have to keep running. They want to make sure that money is being pumped into the economy. So all of those things are going to be happening every day. So right now, New York banks are closed. The banks in Asia and in Sydney are open. So what's happening now with New York banks, they've pretty much balanced their books. They're going to balance their books, or the US is going to balance books against London's books at 2:00. So people always wonder why, if you go to your bank account, especially with the credit union, at like 2:00 in the morning from 2 to 5, you can't get into your account online. If you want to do a transaction, you have to call. Part of that is because there's 2 sessions where they have to balance books. They have to prepare for the next trading day, and then they also have to balance the books after they're actually closed. So once the banks are actually closed, they go through the books, balance the books against themselves, and then they go through and request money overnight from the Fed to get money for whatever operating costs they're going to need for the next day. So that's that 2 to 5 o'clock period in the morning when you can't get into your account, because they have to go through and say, okay, well, we have, let's just say, 1 million members at the credit union, and this is how much money they all have. This is what we can actually offer in order for us to get money. So they go through and they calculate how much money you have in your account. You can't do any transactions because they need all of those decimal places or all of those digits in your account to help make sure that they can get money for loans, money to operate for the next day. So speaking of those digits, here comes the actual fundamental information that's going to help you with the logic behind everything, because the market can be very emotional. There is logic behind the stock market. There's logic behind bank accounts, how banks operate, why banks operate the way that they do, and the government. So there are several Americans, to the tune of about 40%. So 40% of Americans would have to go into debt, meaning they would have to take out a loan in order to cover a $400 debt in the United States. So that's a big deal. That's a big issue. So when we're talking about overnight rates, and when we're talking about the credit market, the money that's being provided by the Fed, that's something that you need to think about and just kind of take into consideration. So if people don't have that money in their bank account, that can be an issue. But on the flip side of that, nobody really asks, like, how much money can you possibly have in a bank account? Like, what's the max amount you can have? So you will get banks that will say you can have an unlimited amount of money, which to an extent is true. But in the United States, the FDIC only insures an account up to $250,000, and that's per person per bank. So you can have 5 accounts open at the credit union, but the total of all 5 of those accounts can't be over $250,000 if you want to be covered under the insurance. Now, sure, you can go over. Let's say you went to 300,000 between all 5 of those accounts. Well, if something happened to the credit union, you would only be able to get back 250,000 of that, and you would lose 50. So that's something to keep in mind. So banks will often spread out the assets of those who have more. The credit union isn't one of those, but if it's an international bank, they have what's called asset managers, and they will actually take the money that's in your account, spread it out amongst other banks so that you can continue to be covered and be insured within that country's rules. Corporations have the same issue. So we're going to start talking about stocks pretty soon. And I'm putting together the materials for you guys for that. And when we start talking about stocks, one thing I'm going to show you is a balance sheet, which is something you get during the earnings report. And what's going to happen there is you'll see where a company will say, like, this is how much cash we have on hand, AKA like their bank account. But you won't just see cash, you'll see cash equivalents. And that's the same thing essentially, but those cash equivalents are like bonds and treasuries. So companies and corporations are still going to be covered under the FDIC because they're only going to keep 250,000 in a bank account. But those billions of dollars that you hear companies having, they're going to be in bonds and treasuries. So they're not going to be under those same rules for the FDIC. So now I want you guys to just really think about this like for a second. Everything that's done now banking wise is digital. Computers have limits. So that's the one key I want you guys to take away from this, is that computers have limits. So as far as digits in the computer, all digits are made up of zeros and ones. Banking systems are made up of 64 digits. So it's like a 64-bit program that banks run off of. When you go to their website, you'll see something that says like 128-bit security. That's for their security, that's for their encryption, but it's not for their actual banking. So that does not cover actual accounts. I tell you that because I'm getting ready to share with you in a few minutes the max amount of money you can have in a bank account, and that's really going to be a major part of it. But before I do, I just wanted to let you know that the FDIC insurance and the insurances and the limits on coverage does not apply to banks. It doesn't apply to the Treasury, and it doesn't apply to foreign governments because they have what's called Treasury accounts or Federal Reserve accounts. So those accounts allow the banks to hold money with the Treasury or with the Federal Reserve, and that account right now is at about like $4 trillion. So no corporations, so like Apple, Google, those companies can't have these types of treasury accounts. No individual, no matter how much money you have, only banks, treasury, the treasury, and foreign governments can have treasury accounts in the United States. So if you're just wondering what the largest private account ever held, like the amount, In history, it was $5.5 billion, and it was Bernie Madoff. And the banks made $550 million in profit off of his $5.5 billion he held in a bank account. He couldn't use treasuries and he couldn't use bonds because the Ponzi scheme would have been up. They would have known that he wasn't actually buying the stocks and stuff that he claimed to be buying. So he had to keep the money in a private bank account, and Chase Bank let him do it. All right, so on to the numbers now. So remember I told you that banks and their accounts are written out in 64 bits. So this ties into forex, I promise. So $1 in 64 bit is actually 0.0001, which if you write that out, it's actually a pip. So I'm gonna stop sharing my screen for a second and pull up the whiteboard so I can type this out. Hope you guys follow along. So, all right, just to type what I just said. So $1, if I were to type it out in banking language, in a bank account, this is what $1 looks like actually. So that's why pips are important, because banks use 64-bit integers. And that's why forex is quoted the way that it is, out to the pip, because of banking computer language. So to give you another example, $2.85 would actually look like this. And so the reason why banks do this is because also the forex market prices are constantly fluctuating. So the dollar is never really $1. And whenever you look at it against whatever bank or whatever foreign government we need to borrow money from to operate, or wherever the Fed is needing to do their exchange to get the money for overnight rates, whatever the case may be, the price is always fluctuating. So it goes out to the pip to be super precise. So that's why also, if you look at your bank account, sometimes the numbers are rounded. That's why, because prices are always fluctuating, and whenever they balance their account, sometimes your account may be up a penny, might be down a penny. It's just for the precision of the numbers. All right, so so 64-bit is just a 64-digit string of zeros and ones. And what happens is, that's called binary. And so binary is whenever it's all zeros and ones. And in your bank account, it's going to be quoted as base 10, which is like 0, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So there's a conversion that has to take place whenever the bank is going back and forth between the two. All right, so you can go online and you can use a bit calculator to do this. So 64-bit, 1 bit has to be used to tell the computer whether the number is positive or negative. And whenever you actually go through and do the max number that you can get off of 63 of those digits, this is the number that we come up with. Okay, it's like 18.4 quintillion. And so now that we know that this is the max, okay, so sorry, this is the max number with 64 digits. But now that we know we have to take one of those digits and use it to make a number positive or negative, then we end up with 9.2 quintillion. Never seen so many zeros. I have to make sure I get them all right. Okay. And then, so now that we've done that, we have to move the decimal place over 4 spots, because remember, this is the number that we're going to be getting if it's 64-bit, but we have to translate this back into base 10, which is how it would actually look in the bank account. And this is actually going to show the largest amount of money you can hold in a bank account. And this is any entity, government, personal. So it's 922 trillion 337 billion 203,784,477.58. So I bring that up to you because we are in an environment now. It all ties back to Jerome Powell. So when Jerome Powell is talking about keeping interest rates low and trying to balance inflation and saying that it's okay for inflation to run a little hot. Inflation running a little hot is the equivalent of saying like hyperinflation. So you see this number, you're like, oh, $922 trillion. Like that's a lot. Well, yeah, it's a lot, but would you believe me if I told you that there has been a government that maxed out this amount? It has happened. It happened in Zimbabwe, actually. And if you remember me talking about it a couple of weeks ago, Zimbabwe is one of those countries whose currency folded. And this was during that time of hyperinflation. So they reached hyperinflation. They maxed out this bank account amount. So what they had to end up doing is whenever you would go into a bank, the tellers were having to actually do bank ledgers by hand, which was probably a pain because who knows how many customers or members they had at the bank. So they had to go through and look at the digital amount of money that the person had, and they had to multiply that amount by 1,000,000. So instead of going out now 4 decimal places, it was 6. So they had to do all of that physically by hand. And it was a pain. So I want you guys to keep this number in mind. Not saying that we're going to hit it, not saying that we're anywhere close to it, but when you look at how much debt we're in as a country, when you look at how much credit is being given out every day, and then you just look at all of the printing that's being done by the government. So these stimulus packages, they look cool, they look fun, but they're debt, they're government debt that's being added. And a lot of people don't realize that whenever we look at the debt calculator, you know, we're looking at government debt, we're looking at government spending, but we also need to take into account how much money people are actually holding in their account, and then all of these debt accounts that are on the other side of that. So all of that kind of goes into adding and feeding into this number. It obviously it applies to foreign governments as well. So yeah, that's a interesting tidbit I wanted to share with you guys, because there is logic to trading, there is logic to investing, there is logic to banking, why banking is done the way that it's done. A lot of, like I said, forex is based off of the fact that financial institutions their bank accounts are written in 64-bit. So just remember, if you ever wonder why, we're quoting out the pip to the fourth digit after the decimal, that's why. It's because of the 64-bit. And then also just keeping this number in mind, the $922 trillion there. Sounds like a lot, but Zimbabwe learned the hard way that that number isn't too far out there. So I'll ask if anyone has any questions. And then if you don't, I'll turn it over to Mr. Levels so that he can start with the technical. Cool. All right, so you can continue to type if someone was typing, but I'll go ahead and turn it over to Mr. Levels so that he can get started.
Cool beans. Great job. Great job. Appreciate that valuable information too, Carmen. I got a notepad full of notes over here. Believe that. Let's jump into these technicals. See what we got popping. Cool beans. All right, starting with the dollars as always. Going back to Monday night, I told y'all that I wanted to see the dollar continue to be bearish and sell off to this structure here. We see that we have achieved that move. Now that we're down into this structure, now I want to see how price reacts to this structure that we're at. I do want to see the market give us some bullish momentum off of the structure. But that don't mean that's what's going to happen. So we just got to be patient now that we did get the downward move. Let's see how price start to accumulate within this structure. And if we do see the dollar push down and fill in this gap that we got, I would be liking to get in below the gap up in here somewhere. Up in here somewhere. I will be liking to get in here and ride the dollar up or see the dollar push up, because I don't necessarily trade the dollar. I just use it to gauge the pairs that I do trade. So that's what I'm expecting out of the dollar for the rest of the week from this point forward. So we'll see if the dollar give us the move that I'm looking for to finish out the week with. So with that being said, let's look at our currency pairs. We already know that our currency pairs move in the what direction of the dollar? Opposite direction. True. So we know that if we was expecting the dollar to be bearish to start the week out with, then we was expecting our currency pairs to be bullish. Going back to Monday night, we was here. Told you guys that I wanted to see the dollar come down and give us a retest and then continue to push to the upside, because we wanted to see the dollar be bearish. So therefore we wanted to see our currency pairs be bullish. Euro USD didn't come back down and give us the retest. It just decided to keep pumping. So you would have had to wait for a pullback and get in on the dip. As I always tell you guys, to buy the dip. Once you figured out the trend of the market, only thing you're doing is just shopping for discounted prices at that point. Once you know the trend of the market, only thing you're doing is shopping for discounted prices. We already see the trend of the market. We was looking for the retest. We didn't get it. Price decided to keep pushing. Cool beans. We see this pump up. See price pull down. Buy the discounted price. You don't buy here, you buy here. Price breakout. So now I want to see price probably come back down here and retest this 1.2037 level if we can't get back above these highs. So we can't get back above this structure and hold that structure, then of course price ain't got nowhere else to go but to the downside. So that's what I'll be looking for out of Euro USD for the rest of the week going forward. Of course, we know we're expecting the dollar to start pushing to the upside, so we know we expect our currency pairs to start pushing to the downside. Same thing with GBP USD. GBP USD being real choppy, but same thing. I told you guys I wanted to retest. We didn't get the retest. Price broke out, but you see what I mean? Like real choppy. It's not giving us a real break, like a convincing candle, aggressive candle. As I always tell you guys to look for aggressive moves. This just choppiness, and then we did eventually get to the price target, and then we consolidated here and then pushed up, and then we got a good push here, and now the market is starting to make lower highs and lower lows. So let's see if we see the market give us this move here. That's what I'll be looking for out of GBP USD. But all this right here, I don't like it. I don't like that price action. And y'all know I don't really trade currencies like that anyway. I mark them up for you guys. So you guys can, basically start out with currency pairs. They're less volatile, but I know eventually you guys will probably want to graduate to indices like U30, NAS 100 if you're not already trading them. But these currency pairs are good for beginners and starters to learn on. So that's why I chart them for you guys. But anyway, moving on to Nzd USD. Where were we at? Monday we was up here, right up in here. We got the retest, push up. If you took the trade, you would have made a little bit of money, caught some pips, broke even, or got stopped out in profit with not about 20 pips. Then you see we kind of came down here, traded sideways, consolidated, and then we got that aggressive move. Boom. Price pushed back up but couldn't break back above this high, so we got another push down, and price came back up, couldn't break back above this high, got another push down. Now price just came back up and we couldn't break back above the previous high. So we expect price to push on down. I expect price to come to next structure that we got here, next low at the minimum. And then we will have to do what? Have to wait and see how price reacts to this structure. So we don't worry about a market not going in a direction that we thought it was going to go in. We take emotions completely out. I don't worry about being right or wrong about an analysis any longer, because I know and understand that there's no such thing. And once the quicker you can come to that reality, to that realization, then the quicker you will become a profitable, successful trader. There's no such thing as right or wrong. The market is the right or wrong. It's whatever King Market says. And I've learned to just flow with the market. So that's why we don't predict the market. We flow with the market. So yeah, that's what I got looking at NZD going forward. Looking at silver, we got up to the structure. Or was we already at the structure? Yeah, we was already in the structure. I wanted to see the retest and break up. We got a little slight break up. This is silver, so that was some good pippage. If I can get my ruler to work. Ooh. Ooh. I lost my Don't worry about it. Don't worry me. So, yeah. Like I was saying, I wanted to see the push up. I think I got my shit right, man. I don't know what just happened. We wanted to see the push up. We got a slight push up. That's what I want to do. I wanted to measure that move. So yeah, that's 3,500 pips. So like I said, silver's more volatile than U30. She's nothing to play with. Silver nor gold. No commodity for that. Metal or commodity for that matter. Oil is very volatile. Gold, silver, cotton, corn, cocoa, very, very volatile. So commodities is nothing to play with. But then yeah, back on point. But yeah, we got the 3,500 pip move up. Then we came back, retested it, slight push up, but didn't break this high, didn't make a new higher high, and then we see silver slam down back through the structure. That's price telling you something. Then we see price pull back, but we don't break back above previous high. And then it just starts using this structure to sell off of. Look how many times it used it to sell off of here. boom, here, boom, here, boom, here, boom, here, boom. Big sale, boom, slam down. And now we'll probably see silver continue to sell off for the rest of the week. Unless it holds this structure that it just sold down to. So that's why I say you have to wait when price accumulates and break out of one structure and moves to the next. You take profit. I don't care if your analysis does have silver coming all the way down here. You don't be crazy and hold that trade and hopes that it's gonna go straight there. It's never gonna go straight there. The market doesn't move like that. The market doesn't operate like that. The market operates how I'm showing you. It operates in cycles. It's gonna have a breakout, then it's gonna accumulate orders. That's the structures that you see I have marked. That's the market accumulating orders before it goes to its next destination, which is the next structure. With the way that I'm teaching you how to trade, this strategy that I'm teaching you, you can identify those structures and be able to follow price action and be able to have a high probability that the market is going to go in the direction that you want the market to go in. And with using the risk management strategy that I teach you, if the market do go against you, you're not really that worried because you had your stop loss in place and you was using proper risk management. So it is what it is. And with using the risk to reward method of 3-to-1, then we know that you can lose 7 out of 10 trades and still be profitable. So, yeah, man. So let's see how silver reacts to here. See if it breaks through. If it do break through, then we'll what? We'll wait for the retest. See how it play up in there. Ain't no telling how it's gonna play up in there. You see how it played off of this structure. It played off of there for what? From the time it broke through it to the time it broke back through it to start selling off, 1 day and 15 minutes. And then after that 1 day and 15 minutes, it still played around for another 22 hours and 15 minutes before it gave you the big sale to the downside. So that's why I tell you guys, patience is so important when trading in this market, because you would have marked this chart up and you would have sold off right here as soon as you seen this push down. If you were following my trading methods, soon as you seen this aggressive push down, you would have got in, as you should have. But you should have took profit right here though, and got back in here and got back in here, or set your trade and set your take profit and walked away. But if you're going to just be sitting there looking at your chart and you're going to be doing that, you need to be capitalizing on every move, because if you don't, the market is going to play so many games on your emotions that you're going to be taking losses when you shouldn't, when you should be taking profits. So that's a word of advice. If you're going to be looking at your chart, sitting in front of it, take those profits. I mean, this is silver. That move right there, 2,500 pips, 1780. I mean, good little money, good little bumps. And then you get your big push and another push. So I'm showing you guys how to trade price action and market structure. And I'm showing you guys how to avoid the roadblocks and the obstacles that 90% of traders don't ever end up making it over. So get this whole idea thing out of your mind about wrong or right, and then strictly focus on reading price action and identifying market structure. And if you do those things, I guarantee you will be a master trader eventually. I'm gonna get you there. So looking at gold, um, we see how gold reacting to this price structure. It's been giving us some sales, giving us some sales. Then we seen this push up, and then price came back down and broke the low. We pushed up here, didn't break back above this high. Then we see market push up again, didn't break back above this high. So I want to see the market here. And then I would like to see if it break through. And then of course wait for the retest and take it down to the downside. But of course, y'all know that the market don't move cookie cutter clean like I just drew it out. It moved like I showed y'all on silver, like this. That's how the market moves. So just giving y'all a roadmap. And for gold, this would be our next structure. And so forth and so forth. And price is definitely going to probably bounce off of all of these like that. And when it come here, it'll probably and so forth. Alrighty. And last but not least, U30. Think I deleted everything off U30. Yeah. Because I got the move out of U30 that I wanted. Which was this sale that I called Monday. Well, matter of fact, let me do it like this for y'all. Before I do that, I told you guys that I wanted to see price not break back above this high. And I said if price didn't break above that high, I would be looking to sell U30. Yeah. Price pushed up. We didn't break the high. When price came back around, I entered here, right off of that structure that price had made when it came and made this swing high. When I seen that this high didn't break this high, I wait, be patient. Price comes back, give me an opportunity. I execute my trade, set my stop loss above the previous high, and ride price down to my take profit. In easy 1,300 pips. Easy. And then Ghost told you guys that he was expecting a buy off of a 4-hour engulfing. See if, because I think Ghost used another US 30 chart. I think it was this engulfing right here though. Yeah, that engulfing. He was waiting this red candle that engulfed this blue candle. This is the 4-hour time frame. So this is what Michael Huddleston would call sniper entry. He coined that phrase. And so that's what Ghost was waiting for his buy off of. And so that's what I was talking about in the group chat. And that's what I was just talking about a few minutes ago with there being no right or wrong analysis. It's all about being able to identify what the market is doing, being able to read price action, being able to identify market structure, and being able to form an analysis around that idea. His idea was for a buy. He had to be patient and wait for his buy to come to him. His buy came to him beautifully and it took off. I had to be patient and wait for this sale to form. It formed beautifully and took off to my take profit. So as you see with time and experience, you'll be able to capitalize whether the market is moving up or whether the market is moving down. You'll be able to identify what the market is doing and be able to capitalize off of it. Moving forward with U30. As long as we hold below this structure, I want to see U30 sell to the downside because I see pockets of imbalance that I would really like to see get filled in. But once again, just because I would like to see them get filled in don't mean they're gonna get filled in. But knowing and understanding market balance and market imbalance, I got a pretty good idea of how the market should react to current price. So with U30, if we stay below this structure, then I'll continue to short U30 to the downside. So with that being said, I'll stop share. Do anybody got any questions?